Jim Pickard. He's the chief political editor for the Financial Times. Very good morning to you. Look, there have been criticisms, haven't there, of the Governor of the Bank of England that he's been pretty slow in dealing with inflation. We're expecting this big hike today. Too much too late, or too little too late? What's your take on it all?
I mean, there is criticism of the Bank of England and the Governor in particular. I think the problem they've got, though, is that when you have an inflation target of 2%, and when you have this sudden inflation shock that is caused by global factors, Russia's invasion of Ukraine has put incredible pressure on the price of oil and gas, and that has caused this inflation around the world. And therefore, they found themselves just in this impossible position where you can't hold inflation at that low level without whacking up interest rates faster. So the criticism of the Bank of England is that they could have put up interest rates earlier and they could have done it in a more steady way. But I don't think that would have prevented the pain that is heading the way of millions of households, where we've seen figures suggesting that by the end of 2024, there are going to be something like 5 million households having to pay something like £5,000 a year more on their mortgages. I mean, that's an incredible shock to the system. There was a prediction by Nationwide, I think last night, suggesting that in their worst case scenario, house prices could fall as a result by something up to 30%. I suspect that the house price correction that's coming our way will be less than 30%. But, when you think about it, that's going to be pretty severe for an awful lot of people with wider repercussions potentially for the financial system. So it's an incredibly serious situation. I don't entirely see what the Bank of England could have done differently unless you go back years and you put up interest rates to a higher level years ago and therefore prevented the asset bubble that we've seen in property and elsewhere happening. I just think that inflation hit the world so hard and so quickly that there wasn't that much that the MPC could do on this.
Jim, you mentioned the global factors, and we know interest rates are rising from Aspen to Aldershot all around the world. But nevertheless, it's the Conservative government that's going to get quite a lot of the blame for the interest rate rises, mortgages going up, because of the way the market reacted to the Truss quasi-Kwarteng budget, how spooked those markets were, which then saw various mortgages being withdrawn immediately from the market.
Yeah, and listening to Tom earlier, he was absolutely correct to say that the mini budget came the day after the Fed had put up interest rates and the MPC had put up interest rates last time round, and that had as much of an impact as the actual mini budget. But what Liz Truss did, the mistake she made, was to come up with that £45 billion of unfunded tax cuts at a point where interest rates were going up as well. It basically just spooked the markets incredibly. And therefore, even though that wasn't the only reason for the financial chaos we saw for that month, I think in the minds of the public, they will remember this as a Conservative mistake, a Conservative government mistake. And John Curtis, who's one of the most famous pollsters in Britain, did a presentation yesterday where he said that if you go back over the last century and you look at governments which have gone to the polls after a big fiscal shock, they normally get absolutely punished at the ballot box. Now, obviously, history doesn't repeat itself precisely every single time, but there's quite a warning there for Rishi Sunak. And of course, he can say that he wasn't in charge when this happened. It was his predecessor, but it was a Conservative government. He's a Conservative. They have been in power for 12 years. And when people's mortgage rates do go up, I think they may understand that inflation is a trend that's happening worldwide, but I think there will be a lot of blame for the government. And yes, Tom's point that the period of interest rates being at rock bottom, of course, the Bank of England rate was only 0.1% in December. Yes, that has been a historic anomaly. We are returning to levels that are more normal on a kind of historic basis. But I don't think the public are going to be very forgiving of that. And of course, when you've been at incredibly low rates and people are fixing their mortgages at 1% or 1.5%, and then it goes up to 4, 5, 6, I think some people are predicting 7% mortgages on fixed rates. That is a huge proportionate increase in terms of it may not sound like a massive increase, but in proportionate terms, it's huge, and people are going to feel an awful lot of pain. I mean, I think in terms of today's increase, the market thinks it's a 0.75% increase we're going to see, or 0.75 percentage points to be more precise, a rise from 2.25 to 3. I think People on variable mortgages will definitely see a rise as a result of that. I think for fixed rate mortgages, that the increase will be a little bit less, because I think the measures that Rishi Sunak has taken since becoming Prime Minister, and Jeremy Hunt has taken since becoming Chancellor, and the measures that are anticipated in the fiscal event in a couple of weeks, I think that has steadied the gilts market. And therefore, if you're on a fixed rate mortgage, the jump today or in the coming days may be a little less than if you're on a variable rate.